Welcome, ladies and gentlemen. Welcome to the midweek technical and fundamental analysis. I'm about to go ahead and jump into it. As always, let me give a quick disclaimer before I get started. This is not financial advice. Anything that I share during this analysis is for educational purposes only. I repeat, this is not financial advice. Anything that I share during this analysis is for educational purposes only. Cool beans, cool beans. Cool. Let's get into it. So, looking back over the beginning of the week analysis, um, give me 1 second. All right, sorry about that. All right, looking back at the beginning of the week analysis, um, I told you guys that my bias for the dollar this week was bearish. I outlined where I wanted to see the dollar go, where I was anticipating price to be drawn to, and I told you guys, I brought you guys attention here on the pre-week analysis and the beginning of the week analysis. Go back to the YouTube channel to watch it and review it for yourself. But I told you guys that I wanted to see price come down into this daily fair value gap that you see here, this blue shaded rectangle, right? And I told you guys that the only way my bias would flip to bullish is if we broke this weekly buy side liquidity and this daily buy side liquidity. I told you guys that I would need to see price break above that and close above that in order for my bias to flip to bullish, right? We didn't see that Monday and we didn't see that Tuesday, right? And we used last Thursday's premium PD array levels to sell off of to run down into this daily fair value gap. That's exactly what we wanted to see. We got a little bit of manipulation here on Monday, right? We broke above those PD array levels, right? To run the weekly buy side and daily buy side liquidity, right? But we did not close above those levels. And I told you that that was the only confirmation that I would that was the only thing that would make my bias flip from bearish to bullish. So, being that we did not get that break and close above on Monday nor Tuesday, um, that let you know and let me know that, price was unwilling to push high, right? Price was showing unwillingness to go higher than the weekly and daily buy liquidity. And with that being said, we seen price today with FOMC, right? And the high impacting news drivers that we seen today push price down to that level of imbalance that we wanted to see from the beginning of the week analysis, right? Easy peasy, easy peasy. No break and close. Bias remains bearish and objective hit today, right? So, with that being said, we know that the currency pairs that we trade inversely correlate with the dollar. And we know that if you're bearish the dollar, then you should be what? Bullish currencies because they inversely correlate with the dollar. And so from Monday in the pre-week analysis from Sunday, I told you guys that I was expecting currencies to push up off of the weekly discount PD array levels, which is outlined here in blue with the blue title 62% weekly PD array. That's that weekly discount array that I wanted to see price push up off of to push back through this daily fair value gap into reach for November the 30th PD arrays, premium PD array levels, right? And that's what price has been making its way towards since Monday, right? We had a slight pullback of 20 pips, right, down into these two weekly PD array levels, right? And then from there, prices up off of a 20 pip pullback, prices up 127 pips at the current price. Easy peasy. So, same thing with the pound. We wanted to see pound pull down, retest the weekly PD array levels, right? And push higher to these daily PD array levels here from December the 5th, right? Now these are our next targets here from December the 4th and so forth on up to eventually run the weekly buy side liquidity. Don't know if we're going to get there by the end of the week, but those are my targets before we see price swing lower. From current price, from that daily weekly PD array level to current price, we're up 132 pips off of the level. And with NZD USD, same thing. We expected price to push up off of the daily, weekly fair value gap that we see here. We pushed up off of that. This weekly fair value gap right here. We pushed up off of that, and price is about 115 to 120 pips off of the level. So beautiful week. ES, looking at S&P 500 futures, told you guys that I wanted to see price push up to this daily volume imbalance. Let me go down to the daily time frame, right? We see the daily volume imbalance right here. That's what we wanted to see price go to. And then I told you guys, if we broke and close above that level, that I expected us to run this high of 46.85 this week, right? Told you that was my overall target for ES this week. I wanted to see us run that level. FOMC smacked that level today aggressively and closed above it. So I'm done trading for the week, right? I hit my goals, but I will be paper trading and demo trading as well to see what price does from here because I've hit my agendas, my goals, and I don't know what price is going to do from here. We still have high impacting news for the rest of this week, right? Every day this week. Well, except for Monday, we didn't have high impacting news, but from Tuesday to Friday, we had and have high impacting news this week. Um, Tomorrow, well, I'll let Coleman talk to you about the high impacting news drivers that we got for the rest of the week. But we do have high impacting news for tomorrow, and we do have high impacting news for Friday. And so price could just keep pushing bullish until the close of the week. We know that Thursday typically serves as what? A reversal day, right? Typically, it serves as a reversal day. And so we could see correction in price tomorrow down. Now I'm on the December contract, right? Today was the last day that I traded the December contract, right? Shouldn't have been trading the December contract today, but since I already had my levels pre-marked on there, you can technically trade a December contract until it up into its expiration, but you usually want to switch over once the forward contract is trading more volume than the current contract. So if you go to barchart.com, you can check and see which contract has the most volume being traded. And starting today, it was either today or yes, I think yesterday is when the volumes flipped and the March contract, which we're currently trading now, started trading more in volume than the current contract. So I'll take you to the current contract. I just wanted to take you back to um December contract so you can see that our objective did get hit, got hit and ran through and closed above. So looking at the March contract, which we're trading now, right? I want to see if price pull back down into the discount array level of today's price action, right? All of this move that we've seen today off of um, off of the core PPI news and PPI month-to-month news that we had today, and of course the Fed rate and FOMC today. So those was our two high impact news drivers that we had today, right? Which gave us this imbalance in price and this move that we seen today. And I would like to see price pull back down into the discount array level of that price range. But like I said, high impact news coming out tomorrow and Friday, we could very well see price just keep pushing bullish to the upside. So I'm on the sideline until I get some more data that I can, make a sound analysis off of going forward. But like I said, the objective from the beginning of the week has been hit. And so if you was in the market and you follow me and you seen my analysis and whether your analysis aligned with mine or not, if it did and you was bullish in the market too and you was targeting the same levels that I was trading, that I was targeting, then you should have had a great trade week up to this point, right? And the same thing with ENQ, looking at the December contract, looking back at the beginning of the week analysis, looking at Monday here, right? This is where we closed that last Friday. The pre-week analysis, I told you guys on Sunday that I wanted to see this all-time high level right here from ENQ. As you can see, this is that all-time high level right there, right? I told you that I wanted to see that level rant this week, and I wanted to see new all-time highs created. It's in the pre-week and the beginning of the week analysis. Like I said, you can go back and review it for your own um, research purposes. But just go back and watch the video. Watch the tape, as they say in football. Watch the tape. So we got that rant. We got that rant yesterday, Tuesday. We got that rent yesterday, and price just kept pushing up today with the news of FOMC and PPI numbers. And let's see what the rest of the week gives us for ENQ. Well, we've been very bullish from the 7th. I don't know if you guys recall, but last week I was telling you guys last week that I wanted to see that all time high rent and new all time highs made, right? And when we was anticipating the pullback last week, we was anticipating a pullback down to this shaded area. Go back and look at the video from last week. It's all documented. I said I wanted to see price pull down into this imbalance and retest this shaded area within that rebalance. As you can see, price came down and retested that perfect. and we haven't seen that level since December the 4th, and we are up off of that level from last week, 998 points. So I think that's amazing. I really do. So with that being said, that will conclude the midweek technical analysis. At this time, I'll pass it over to Corman so she can give us the midweek fundamental analysis and drop that saucy on us. It's all yours, Corman.
Cool. Hey everybody. Yeah, I'm here. So I'm driving. So I'm not going to be able to share my screen. I'm just going to talk about some items from news today. And then we had kind of sort of started talking about stocks a little bit.
I'll share the screen for you.
Okay. Yeah, if you don't mind just sharing the Forex Factory calendar, that would be cool. Um, so, and then of course, you guys know we had already a while back started talking about stocks in general. So, in addition to just trading different assets, and different aspects of the market, also just kind of circling back around to stocks as well, because I did mention not the last class, but the class before, and maybe the one before that, that now is the time for people to really consider what you actually hold and your portfolio. So I can actually tell you because it's in my pocket, and I'm safe, I promise. So currently in my portfolio, I have so about 18% of my portfolio is cash, meaning like it's money that's like sitting in an investment account waiting to be used. Like I'm not it's not in a bank account and it has to be transferred, like nothing like that. Like it's just sitting there, like I can execute an order if needed. Share term certificates, so those CDs that we talked about, that makes up like 3.3% of my portfolio. 8.6 bonds. It changed because I bought a lot today because I was trying to shift my portfolio. So almost 5% now should be ETFs. I don't like the fact that 15% of my portfolio is crypto. That's too much for me. So I'm going to have to shift away maybe like 5 to 10%. And then like 53% is stock. So just to get a basis for like what I'm talking about, like that's what my portfolio currently, the allocations look like. And I'll just show you guys on Friday like how I keep track of it and how I'm gonna attempt to rebalance all of it. So today, I was going somewhere with that. Considering the Fed news that we got today, if you hadn't looked into bonds while they still have their rates, if that's something, you don't have to, but if that's something that you want to get into, now is definitely the time to pay attention to those or look at those. We did have bond auctions earlier in the week. And so those assets that tend to be more rate dependent, anytime the Fed is speaking, you definitely want to pay attention. Rate dependent would be treasuries, bonds, your notes, any deposit accounts that you have at the bank, because remember, as rates change, Financial institutions will also change their rates as well. So holding on any increases and then attempting to say that they're going to cut 3 times potentially next year. I always put those cautionary words in the sentence, even if the Fed doesn't, because I know a lot of times people will take what the Fed says and they will go strictly off of that. And not only that, but it's sometimes how the Fed will word things. So the Fed said that cutting rates is not going to be dependent upon a recession, meaning like it's not going to take a recession for them to cut rates. Obviously, if you know what they look at and kind of think about what they've been waiting to see happen, we know, okay, yeah, those things, meaning, you know, the stability of the job market, stability of pricing, as well as decrease in inflation, that doesn't necessarily mean that there's going to be a recession. And all those things can somewhat fall into line without having a recession, although you might still be a little bit hot, or you may go a little too cold, but not really push it over the edge. So obviously the markets enjoyed hearing that news. Businesses, as far as their planning for next year, it's pretty much done. But as far as knowing, okay, raw materials, companies that really are either product or service driven, which tend to be all companies, they can look forward to next year knowing that there's a potential for the consumer to still be in the market, and then also know that they could potentially keep prices the same and not have to necessarily lower them a lot, because hopefully if inflation is decreasing and if there's some stability to pricing in the market, then that kind of helps them to predict future costs, and shareholders like it because, you know, if you can keep profits, or if you can keep pricing relatively the same but material costs are somewhat lower, then your profit margins end up being a little bit higher, which means you make more money, which means you could potentially have more free cash flow, and that's where dividends come from. And so anyway, it's just kind of like a win-win for everybody. And a win for the consumer, hopefully, if prices can come down even a few cents. And I say that, and it doesn't sound like a lot, but psychologically for the consumer, seeing pennies change in a price matter, like gas prices, for instance. 1 cent difference in a gas price isn't really going to make that much of a difference when you fill up your tank, unless you have like 100-gallon tank in your car, or for your vehicle. I'll just put it like that. Because theoretically, a 10-cent change and you have a 12-gallon tank, it's like, okay, cool, you know, just saved a little over $1. Wonderful. But you know, the more you spend, the bigger tank you have, the more you spend. Obviously, you see that more truckers see it, those companies see it more. But for the consumer, they feel like they're saving. And if you can roll prices slightly below $1, so that's why you get like price whatever in 99. But if you can roll a price to say 98, 94, something in the 80s, the mind isn't used to seeing that. And so psychologically, a consumer is going to feel like, oh man, like this is great. I'm getting this product cheaper. Like this company finally decided to lower its prices. But what people also don't realize is that, okay, cool, they played a psychological trick with the pricing, but recipes change, packaging changes. So there's a lot of other things that change that you might not necessarily notice. A good example of this is if you're a baker, I think it's Betty Crocker, changed the recipe or the formulation for their cake mix. A lot of people are super unhappy about it because it doesn't bake the same. Slight changes to recipes, while yes, it saves for the business, the consumers, if they notice, can have some negative implications for your company. So it's like a fine line, it's a delicate balance. So anyway, back to the Fed. So looking forward now to 2024, we can anticipate that the business climate will be a little bit off edge. They were on edge before, not knowing what was going to happen with rates, what was going to happen in 2024. Soft landing, hard landing, you still have people that will debate that. And it's not even so much just the whole year. It's really the first part of the year, because that's when all of the major events financially and globally are going to happen. So you just have to kind of juggle what's going to happen there. And then also, the first Fed meeting of the year is kind of happening right in the middle of all the financial changes. It's near Bitcoin halving. It's near some of the World Bank changes and clearinghouse changes too. So, not to necessarily say that all of that is going to have a correlative effect on the market, but it's just going to be a lot of news items that are just all happening around the same time. So, first half of the year, yeah, could be a little iffy. And the Fed could very well decrease or cut rates in March. They could cut them in June and then maybe wait September and then maybe like cut them towards the end of the year. Towards the end of the year next year, if you look at cycles, how cycles work, I definitely anticipate that we will have a better second half of the year, because again, this is a psychological thing with election years. You have like this like crazy move that happens in the market where markets tend to have a more positive period before elections, and theoretically speaking, like in an election year, but obviously too that plays a part into polls. You could pick a part of year and say, okay, well, this part of the year was better. You could correlate it with different things, but as a whole. And then as for the Forex Factory calendar and things that are coming up for the rest of the week. So obviously today we had FOMC. We'll continue to pay attention to the markets overnight, looking to see how overall other markets respond to the Fed news today. Tomorrow, technically starting in the morning Eastern time, 3:30, is Swiss franc news. So the Swiss bank is going to have their rate news, followed by the GBP. So you'll have the UK coming out with their news. The euro follows, and then at 8:30 we have more US news. So we'll have unemployment claims, retail sales, core retail sales. A press conference from the European Central Bank will be around I think hold on. Yeah, so it's slightly after US news, like 45 minutes before US markets open. So in the morning, it's going to be super heavy. I anticipate that we won't see a lot of change out of other central banks for a couple of reasons. First, because they tend to follow suit of the US and how the US tends to do things, but then also because for how their economies are currently running, I don't feel like and think they would need to. Um, so we'll see. Obviously, anytime you're changing rates, this gives you a chance to get a period of leverage on another currency. That sounds really bad, but sometimes that's what tends to happen as a political sort of thing. And then Friday we have manufacturing and services PMI news coming out for pretty much all major currencies. And then we also have some Empire State manufacturing news coming out as well. So those will be news items that we'll definitely talk about on Friday. The biggest thing for me is just right now seeing how the market truly responds to the news from today. I watched the market fluctuate, and the market has actually done this every day for the last couple of weeks, but very, very heavily this week, where it starts very, very bearish, super bearish. And then midday, it's like the light switch gets flipped on, and the market's like, oh, okay. And everything wakes up and everything like turns green all of a sudden. So that was definitely the case with how things happened today. Although it was slightly delayed today because of Fed news and the volatility range, I tried to measure it. The range was about 18% or so today, wide range. But it's just because the market started out so low and then ran so high and then kind of settled off the highs. If you just want to know like who's happy and who's really like benefiting from all of this news, so your credit card issuers like Visa, MasterCard, they actually hit their all-time high and created all-time highs like yesterday. But anytime you're talking about rates, anytime you're talking about the Fed, the consumer news that comes out, so we'll look at a chart of it on Friday, but consumer debt consumer debt is on the rise, but now you also have to pay attention to, will people be able to service their debt? So knowing that the Fed will cut rates and that could possibly give some relief and reprieve to corporations, then that means, okay, they could possibly say, well, we're not going to have to cut a lot of jobs, or we might be able to increase wages more, those things that will help provide people with more income so that way they can service their debt. And so other companies out there that take out loans, service loans, those sorts of things, they also saw increases over the week. So again, those are things we can take a look at Friday, and yeah, we can just review not only that, but then all the other news that's coming out tomorrow and Friday. So I'm done with the fundamentals.
Cool beans, cool beans. Saucy. Fundamentals is always saucy, y'all. We appreciate you, Corman. We really do. So yeah, I take questions after I start recording. But yeah, that'll pretty much wrap up the midweek fundamental and technical analysis, ladies and gentlemen. As always, if you're gaining any value at all from these classes and these reviews, please feel free to like, share, and most of all, subscribe to the YouTube channel. It really helps out a lot. If you want to join the private Telegram group, visit precisionpipsllc.com. Register for the silver package on your mobile application. We're still having some technical issues with the desktop application, so just visit the website from your mobile application. So, with that being said, I appreciate you guys tuning in tonight, coming out, getting this knowledge and empowering yourselves. Let your family and friends know you love them while they're still here, please. And as always, peace and love, everybody. You know.